Welcome to another edition of Cattle Chatter. I'm Susan Littlefield, and this market, a little bit of whiplash action. That whole buy the rumor, sell the fact, I think is more proof in the pudding this week than what we've seen after those rumors on Tuesday. We're going to dive into that and some other factors that are going to affect you as a cattleman, especially when you look at the trade at the CME. Brad Kooima is joining us today. He's with Kooima and Varilek out of Sioux Center, Iowa. So let's kind of start out with this whole whiplash action that came out. That whole rumor that started out of Missouri, of all places, really took a toll on the markets. But lucky for us, we've got that turnaround going on.
100%. I think you get a great intro to what the market is acting like and feeling like, at least to me. And thanks again, as always, for sharing this time with you. This is fun, at least for me. So yeah, rewind back to Tuesday, which by now anybody that follows cattle know that there was this rumor, which was wrong, was false, was unfounded. It's hard to imagine how this even gets out there unless, it almost feels like grassy knoll type stuff, right? How this gets into the new marketplace. We did recover a lot of it on Tuesday. By the time the USDA did come out and say, absolutely, there's nothing to this story, that there was a screwworm found in Missouri, a case of screwworm. And then yesterday was a little odd. I would have thought that yesterday, we were lower yesterday, not sharply so, but $1 or more lower. I would have thought that we'd have kind of recovered the rest of those losses that we'd experienced on Tuesday, because by Wednesday morning, the story had been told a million times and everybody knew that there was nothing to the fact that we had a domestic case of the screwworm problem. So the fact that it was lower had us a little puzzled. But once again, the storyline is, in my opinion, the storyline is, and that is that cash is king. And when the cash market started to wind up here this morning, started a little bit firmer in the south, where last week they were a measly, I say it, but they were only 220, which was compared to 230 to 231. That is a huge discount in the south. They did not trade many cattle in the south. And I think me and other analysts were thinking, well, they're going to be the first to catch up, one would think. You'd think that the feedlot manager there would bow his neck a little bit and say, well, we don't want to take $10 less than Iowa after all, right? So then when those bids improved to 222, up a couple dollars, that started the futures rolling. But that was just a glimmer of what's going on as compared to the north. While we're doing this program, we're getting bid 233. So far for me, it's from 4 different packers. And so far, that's not buying very many cattle. So the all-time high was last week, 231. So I hinted at you on our email this morning that let's talk about all-time highs. It's fun to, even a blind squirrel will find a nut now and then, correct?
Yeah, definitely. So let's talk a little bit more about these all-time highs. Is it just the lack of the cattle that's out there? You kind of made a joke before we went on the air that if we're going to want to see cattle someday, we may have to do so at the zoo, but it does put into perspective maybe a little bit what's going on in this cattle market.
Yeah, I guess I'm going to be careful to not get too smart alecky about that, because those things have a tendency to turn around and bite you, right?
Yeah.
But yeah, I think I mentioned with you before, there's kind of a fine line between too many and not enough, right? Mm-hmm. It's about leverage. It's been so long since we've really had this kind of leverage. Really, I'd say it's been since 2014 that I think some of us that are younger or my age have forgotten even what it feels like. There's just not enough cattle to go around. And it's especially and particularly so in the north. And as I've said 100 times, at the beginning and the end of all markets, start in Iowa, people can think I'm nuts. Go right ahead. How's it working for you? The show list up here is still very, very small comparatively. The show list here has very few cattle that are very fat at all. We continue to pull forward. We love the price. These cattle make lots of money, right? I mean, we cannot wait. Think about who feeds cattle in the north, in northeast Nebraska and Iowa. Typically, it's a farmer feeder, right? And they're going to feed calves. They haven't had any of the yearling thing. They haven't had these big prices yet. They can't wait to get in on this. That's what I'm seeing. And so they're very, very willing sellers. The basis of, futures compared to cash would also encourage you to sell it. And so, yeah, a lot of it is a function of finally 7 years of liquidation. And this is what we've got. So where do we lose it? an event like Tuesday. You know, I'm not going to lie. There's a couple of us here, me especially in the office, was going like, is that bearish? Why is that so bearish? Even if we would get a case of screwworm. And I suppose I know why. Is because uncertainty is always bearish, especially when you're at record highs. And swine flu comes to mind. Remember that? People didn't eat bacon and pork chops for a while because of swine flu, and it had nothing to do with being transmitted to people. It was strictly a disease that hogs got. So I get it. We don't want to do anything to hurt customer and consumer confidence here, but you've got a unique deal here where demand throughout this whole deal so far has held up pretty fine. Now, normally this is the time of year where you see a rollover in the box prices. You see a transition. They've got we're done with Mother's Day. We're done with Memorial Day. They've got the meat bought already for Father's Day. And that's usually when you transition to a hamburger hot dog type of a feature, right? It's going to, I'm not saying that's a new thing. That's something that's very seasonal. So you're going to see probably a decline in the boxes here, I would guess. You've got, there's some unresolved issues out here, Susan. Don't the tariff. Remember that? That's a 90-day hold. We haven't fixed that deal yet. With Canada and Mexico. So there's some stuff out there that keep your headlights on. I guess, and I've said it a million times. Make sure you got some puts underneath you here just in case something changes. But yeah, right now we've got leverage and it is fun.
Well, and you talk about the tariff thing, and I want to jump back to what else is going on in this market. But we've got that court case that went through. Now they're saying that the president can't do that. He's out of his realm. So that adds a whole new wrench to what you're seeing in this trade. But then with what happened on Tuesday, do you think it was maybe a little bit of a reality check for this cattle complex to say, if this does happen in the United States, this is how we're going to react market-wise?
Yeah, I think that's a that's a great observation, and I should have been a little more. I should have related to that a little bit more when we were talking about it. You're 100% right. In terms of especially how that market traded yesterday, it really felt like we had a bit of to borrow Scott's phrase here. We had a bit of a hangover here, where I think you had two things going on. We had the long speculator that was saying to himself, "Holy buckets! So this thing goes down really easy on news like this. Maybe I should have a smaller position." So, he's moving out of some length probably. And the other side of it is, which is maybe even a bigger deal, is people like me who feed cattle, potential hedgers, who are like going, wow, here we got record profits, or near so big profits anyway, record prices. Maybe I should be a little more astute about getting a few more hedges on. And so that, I think that reality check is an excellent way of describing what that Tuesday event was like. And I guess that's your window. I mean, if that's what the market is going to think of news like that, I guess that's your hint at what it's going to be. Hopefully now, okay, we're going to, I think we're going to do, we're doing what we have to do to mitigate this from happening. Okay. So now, I'm talking to veterinarians and stuff, and to the point where I know more about screwworm than who dreamt you'd ever even be talking about this out loud. Right. Yeah, sterile flies is the key to the thing of stopping it, right? They're actively, getting that going here because these flies mate once, lay the larva or the maggot. That's what creates the problem. That's the deal where it actually physically screws itself into the meat. The other thing that is, what is quite useful is good old ivermectin. But it's more than throwing a splash on their back. It has to be internal. It has to, so there are ways of mitigating it. It's not, but the best thing is to keep 500 miles away from the Texas border, obviously. So hopefully everybody's working hard at that.
U.S. Meat Export Federation held their spring meeting just a week ago, and there was some optimism that came out of this meeting and discussions with some of the guests they had in panels. That heifer retention and herd rebuilding is really happening. You're kind of chuckling a little bit, but what are you hearing?
Well, I'm not chuckling because it's a dumb or funny question. I'm chuckling because, oh boy, are you on my page here of trying to get my head around where that's at. Anybody that does this long-term fundamental analytic stuff this is important. And I'm trying to break it down into a math problem because this, I talked to a guy in Alabama and he's saving heifers, right? I mean, whatever, or I talked to somebody in Montana and he doesn't have enough grass, so he's not. I mean, it's hard to use those somewhat subjective type events like that to make it up. So if I had to characterize it, I would say that the last time we had real data was the April report for the March cattle on feed, which was a quarterly report, which gives you the breakdown of steers and heifers. And we saw that drop about 5%, the heifers on feed as a percentage of steers, which seems to me to be the best way to look at it mathematically. I mean, because if you got a declining herd, you got to know how many, there's either boys or girls that get born, right? And so that's why I think comparing it to the steer is worthwhile. Now, if you're in a full-blown, hold it out, big-time expansion, you're probably looking at 6, 7, 8% more than just 5. You're probably looking in that 12 to 15% range. That's what happened in 15. So I'm still working on this model, and then we should talk about it more again, in the next several weeks. Hopefully we'll keep talking about it. Now, I am kind of glad, two things, July, there's going to be a lot of stuff going on in July between the tariff thing and whether it rained or not for 4th of July. But they got it reinstated, the semi-annual inventory report. So we'll get that at the end of July. July will also give you another quarterly look at April, May, June, just to give you an idea what the percentage of steers and heifers are on feed. So July is going to be, it'll be here before we know it, of course, but that'll be, we'll learn a lot more. I think that you're having slight retention, but not big retention. Okay. I think it looks like the rebuild is going to be almost as slow as the liquidation phase, which was the longest long cycle ever, 7.5 years. The guys keep telling me that I can't afford to. I mean, they're going to give me so much money for this heifer calf that I can't afford to make a cow out of her. So I think that's still going to drive the bus. Now, a big rain like we had last week, Susan. Sorry, I'm talking way too long, aren't I?
Okay. Big
rain. Okay, that's a difference maker. I mean, and one robin don't make it spring. And I know those ranchers are sitting here going like, yeah, just because I got an inch of rain doesn't mean I'm going to have. I get it. But there's a little more enthusiasm and optimism now that maybe you will have grass, which would, that would drive the bus on whether you wanted to do that or not. So keep an eye on the weather too. That's a big deal.
I know we've talked quite long today, but I have to ask your thoughts on these new limits that are going into place next week that some guys might not have known about or had already forgot was going to happen, and how that's going to affect them in the trade action.
Of all the dumb ideas, was that Bobby Knight when they asked him of all the stupid questions? This is just I think it's a terrible idea. 7.25 on live cattle, 9.25 on feeder cattle. When's the last time we had a limit move? Again, the conspiracy theorist out there is going like, oh yeah, they must be setting us up for giving us some bad news so we can down the limit. Hey, I might have said something like that too quietly, and thinking like, why do we need to have limits this big? Why do you need to have a change in value of a contract? And to me, it's a deeper problem, because the next thing they'll do then, of course, that increases volatility. That plays into the hand of the algos. And the other idea that they're floating is going back to 24-hour trading. That would absolutely be the most stupid thing that I can imagine anything doing here. We don't need to trade cattle at night, for goodness sakes. It's not a big enough contract at all. It's a terrible idea. So then you're going to raise the margins. You're going to chase a few more hedgers to go to make a packer contract instead of using futures and, being a big boy. I don't know. It frustrates me to all get out that this is the latest rules. Hopefully this overnight trade is they realize what a terrible idea that is. It was a failure the last time they did it, and it would be a failure this time too.
All right. Best way for folks to get a hold of you?
712-722-0023. I got a fly going up at me here. Sorry. kkbtrading.com is our website.
All right. Thanks so much. That is another edition with Brad Kooima and today's Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.